Welcome to the Road to 100 Million in Real Estate podcast, where you'll benefit from the opportunity to learn to become a skillful real estate investor. You'll get guidance from top industry producers, operators, and investors who are eager to help you learn from their proven strategies of success. Now to your host, Dorrance Constant.
Hey everyone, welcome to another episode. I'm your host, Dorrance Constant. And today I've got another special guest. I've got JT Lynch. JT, welcome to the show.
Thank you for having me. Glad to be here.
Great to have you, JT. Well, folks, I want to let you know a little bit more about JT. JT is a commercial real estate insurance broker with Ramey King Insurance. They specialize in multifamily insurance for over 35 years and are licensed nationwide. Again, JT, welcome to the show.
Yeah, thank you so much for having me. It was awesome to learn a little bit about you, and happy to bring a value to your listeners, and just explain kind of a little bit more about what we do and how we can help.
Absolutely. And now we usually start the show the same way, in that, JT, how has real estate impacted your life?
Oh, tremendously. For as long as I can remember, real estate's been a big part of my life. Ever since college, my parents noticed that, hey, we're paying a lot of money in rent to these apartments where you're at. Why don't we just, get some money down for down payment on a house and get a house for you out there, and then we can start building equity in that. And so they did. They had some money lying around that really wasn't doing anything in the stock market. Put some money down, a down payment on a house for me out at Texas Tech, where I went to school. Put my name on the house, so I was able to build equity as well. And then I had roommates that were paying rent, and instead of paying, these astronomical rates for these small 4-bedroom apartments, we started building equity that way. And then from there, I was able to purchase houses from there after the sale of that, and it really helped jumpstart things for me. And it just put everything in perspective. And if I feel like if everybody had a start, and not everybody is able to do that, but fortunately for me, it gave me a huge start. So it's something I'm going to do for my kids. And it's one thing that real estate has done for me just there from the beginning.
What an awesome story. So you were a student in college, and instead of just paying rent, you learned a valuable lesson, which is essentially learning how to go out there, purchase a property, build equity, and actually, did you even make money from some of the tenants you had there?
Not really. It wasn't really designed that way. We just wanted to pay off the mortgage, and just get by. But yeah, it's so much cheaper than paying for rent. Plus, I took care of it was my house, so
Right.
I made sure that to take care of it and do all the little things, normal home ownership. And yeah, it just gives you a sense of responsibility there. And then by having my name on the house as well, I was able to, after college, we sold that house, and then be able to get better loans for my next property. So, and from there, it just built up, and it happened a lot quicker than some of my other friends who hadn't even started yet. So it's a small thing. The house I had wasn't great in college, so the down payment was, nothing, but it was a nice, kind gesture that my parents did for me. But in the end, it went a long way to help out for the future. So
Great. JT, would you let us know more about your expertise?
yeah, so my expertise is in multifamily insurance. We've been specializing in multifamily insurance for over 35 years. We're actually a full service agency, so that means we can, we've got multiple clients with trucking companies, you name it, construction. We can insure anything. We even have a personal lines department, but really probably 90% of my business is in multifamily insurance. We're located in Dallas, Texas, but we are licensed throughout the United States, so I can help you with any property that you're looking at. I know that you mainly look in the southern part of the United States, probably what is that, the Bible Belt? Is that what they say? Everything below the
Yes.
Bible Belt? That's where a lot of people are looking now. So yeah, I've got properties that we're actively quoting or actively insuring all over Tennessee, Florida, Arkansas, North Carolina, you name it. I mean, we've got properties all over.
Okay. Well, JT, from your experience, as of recent, there's been a lot of changes in the market. Have you seen any changes that our listeners should be aware of in insuring their properties as well?
Yeah, I think the carriers are getting a little bit more picky when it comes to these properties. After a property is bound, probably 1 to 3 months afterwards, you'll get an audit, right? And so it's usually a third party company will come out and take a look at the property. Owners hate it, but it's actually in your benefit. So they'll come out and take a look at the properties and give you a list of recommendations that they would like you to fix. So it could be anything from, hey, this crack in the sidewalk, you need to get this repaired because somebody could trip on it, to something big like the wiring is all aluminum. This needs to be fixed right away, all sorts of things. And they're getting more picky about these items for good reason. And it's because there's claims that are made on all these items. So I think the more you take a look at the property and things that could pose a risk to future claims, and be more open-minded to this is why the insurance companies are asking you to do this, because they don't want you to have future claims. In the long run, yeah, it kind of sucks that they're coming out there on your property, your baby that you just bought, telling you that, hey, you need to fix these items. In the long run, it's going to be better for you, limit your risk, but also it's going to improve that property. And the more and more improvements that happen to all these properties, ultimately, the less claims that are made is the idea, and then the lower premium that we can have. Everybody's talking about, oh, premiums are rising. Well, if we can get these properties fixed up, less risky, then hopefully we can lower those premiums without so many claims throughout the year.
Gotcha. Now you started having a conversation about premiums. So let's talk about this. What are some of the coverages that you believe are the most important that real estate investors should be having on their properties? And after that, what are some of the optional coverages but you think that, hey, those should be on the property, optional or not?
A lot of times, and the lender's going to dictate what needs to happen. So that's kind of nice, because you don't have to guess on what kind of coverages you need. Your lender's going to tell you, no, we need this and this, we need this building amount. In their eyes, they think, oh, this is our property until you get it paid off, so we want it covered this way. So it is kind of nice having them let you know, no, these are the guidelines that we need to follow. Most of the policies that we find are going to follow basically agency requirements, so Freddie or Fannie loans, and they're going to be pretty stringent. But the basics of it are, you're going to have your property coverage, and that's going to cover anything that could physically harm the property, right? So anything from a car running into the building to hail damage, wind damage to the property. And then there's your general liability coverage, and that's for things like trips and falls, right? So that crack in the sidewalk, somebody trips on that crack and they're injured and would like you to pay for their medical bills. That's typically what you see in a general liability claim. And then there's your umbrella coverage. Your umbrella, a lot of people think of an umbrella, no, that's all encompassing over everything. Well, not really. Your umbrella is an additional limit when your general liability limits are exhausted, right? So you usually have $1 million per occurrence on your general liability. If somebody sues you for more than $1 million, well, what do? Well, that's when your umbrella limits start kicking in. So those are your three big main policies that you have there. You're going to find those in most every single one of these policies or one of these properties that you're going to get. The additional items that you'll look at are probably like flood. If you're looking in Florida, Houston, Louisiana, a lot of these areas are going to be in a flood zone or close to a flood zone. You're going to see a lot of areas that may be in 100-year flood zones. So then you really want to take a hard look at, maybe it's a 100-year flood zone. Maybe your lender's not requiring it, but we've seen a lot of times where no one's required flood, but man, how much would you have paid, right, to not have to worry about flood damage that you had, just now? So if it's a 100-year flood zone, it's not going to be near as expensive if you're in an actual flood zone. Depending on the property, it could be, just $5,000. You'd much rather pay just the $5,000 now than to have to pay for all those repairs out of pocket later on. So those are things you want to take a hard look at. And also know going into it what your insurance is going to cost. If you think that it's $400 a door in Florida, that's going to mess up your underwriting when you finally get your final insurance quote. I think the biggest item is a lot of people don't get the flood insurance that maybe they should, just because, well, I underwrote to $400 a door. I wanted to do flood insurance, but I just can't afford it now, right? So you got to know what you're walking into. And one thing that we do that's a little unique is before you even submit an LOI, if everything pencils out on your end, go ahead and send me an email with rent roll, T12, and the OM, and I'll send you a free insurance estimate. And that's basically the properties, the like kind properties that we insure in the area. What are those insurance premiums coming in at? And an average of that's how I get my estimates. So it's kind of a real time, what is the market doing and what can you expect at this property at this time? And I assure you, it's not $400 a door anymore in Florida. So I can get you a lot closer than what that T12 or that OM might say. And there's a lot of reasons why those might be a little off, but I'll give you a true market analysis at that time. So
awesome. So let's take a perspective for our folks who are listening, who are investors, and they're doing their due diligence on, let's say, an investment property. And of course, one of the things that comes up is the insurance, something that's really, really important. How would you encourage investors to do their due diligence on the insurance policies that are covering the property?
So you mean they actually have the current insurance at that property?
Yes.
Okay, so there's a couple things that you want to consider. First off, you're probably going to get a loan, right? You may get an agency loan, and those loans are going to have different requirements than maybe that owner currently has, right? If that owner has owned the property for, some of these we've seen 30 years, they're just kind of a family run business. Maybe they're paid off and they don't have a loan anymore. So they don't have these requirements that you're going to be beholden to. So they can almost get any insurance policy they want. They almost could be self-insured. They don't even have to be insured, really. A lot of times when you're looking at these policies, you're thinking, oh yeah, they're only paying this. Well, that might be true, but based on the lender that you're going to get, that you won't be able to have that policy, right? Because your lender is going to require this, and this, which you can't have, right? From their current policy. So sometimes we see that when you see in a T12, no, they're only paying, $20,000. Well, sure, but that's a different policy. You're not going to be able to have that because you've got lender requirements. Also, what is their deductibles, right? So their premiums might be pretty low, but are their deductibles, 10% wind and hail? What are those? Maybe that's not something you want to do. 10% wind and hail or a named storm, you're basically self-insuring. You better have that money out of pocket ready to go if there's a claim that needs to be made. You're probably not going to make a claim. You're going to have to pay for that out of pocket. So those are things that I would look on that policy as well. Premium might be great, but that's not the whole story a lot of times.
And then when transferring over to the new ownership and, folks who are maybe, let's say a situation where it's a sponsor or an investor is actually vetting a sponsor and actually doing their due diligence on a policy, what are some must-haves that you believe an investor should be looking for or questioning in that new deal?
A lot of times the building values will be undervalued. So we've seen this a lot, especially if a property has been with the same carrier for a long time. They just don't update their building values. Carriers, that's one thing carriers are starting to do, is starting to increase those building values. And what I mean by that is the price per square foot, by how much that property is valued at. So we've seen stuff as low as $60 a square foot, and depending on the area, replacement cost is now $120 a square foot, all the way up to $180 a square foot, depending on where you are. And so if your building value is based off of $60 a square foot, that's really not a true replacement cost anymore. So if you're still going off of that same value, well, that it's not correct, right? In the event of a claim, then it's going to be undervalued. So you want to make sure that replacement cost is correct. Also, your loss of rents. You're trying to improve the property, do certain CapEx work to justify increasing rents and bring it up to market value, right? So you've got to adjust your loss of rents as well. If you've increased the rents, I don't know, from $800 a door to $1,000 a door, well, you need to change that on your insurance policy as well, because if you've got a loss on some of these units, you want to make sure that you're reimbursed for those loss of rents in the event that you can't rent out these units too. So you need to make sure to that your policies are up to date to what you're trying to do in the market.
Awesome. JT, we're going to switch this up a bit.
Sure.
Would love to hear about what advice would you give yourself, let's say, when you were first starting your career?
First starting my career, invest in real estate.
Yes.
Right? Man, first starting my career. I wish I would have gotten into multifamily insurance earlier. However, all of that's hard to say, because then I wouldn't have learned all the lessons I made. I learned along the way to get where I am. So it's kind of hard to say that. But I think one of the lessons I learned along the way is just to trust your gut, and to, ultimately what I do is considered sales, but I really don't consider it a sales position. I consider it a relationship based position. And, talking about other policies, I'll be the first to tell you, Dorrance, let me see that other policy. Let's look it over together and we'll discuss it together. And I'll be the first one to tell you if it's a good one. I'll tell you to stick with it. Stay with that policy. I'll tell you why it's good, why it might not be so good, how we can be better. But if it's great, stay with it. And I found that just being open and honest, even though I might not earn your business on that transaction, you'll come back to me on the next one. You'll refer all your friends and family to me. And it's just the better way to go. And then I can sleep better at night, and I don't have to feel like I'm selling anybody on anything. So that's been the biggest lesson for me. And I wish I would have learned that sooner. There's so many sales classes and all this stuff that I used to do. And I always felt deep down in my gut, it's like, if I just treated them like a person, I think I'd be fine. And ultimately, yeah, that's pretty much all you have to do, is just build that relationship and trust, and then, yeah, you'll be fine.
Absolutely. I mean, when you look at it, the multifamily space is a pretty, there's a lot of multifamily properties, but it's a pretty small community of folks who are continually investing
right
in these properties. There are groups that own thousands of properties. So having that relationship with your potential client, though not gaining the business this time, but actually adding value, goes a long way.
Right. And it's a numbers game. I mean, it's all numbers, right? So that you can't hide from the deductibles, from, it is what it is. So why try to, I don't know, make it look better or worse than what it is, right? So just explain everything, be open and honest about it, and everything will come back to you full fold.
Absolutely. Also, JT, what's something that you're working on right now that you're excited about that our audience should know about?
Oh man, there's a lot of different things. We're trying to branch out to a lot of these groups for new syndicators, mastermind groups, to try to get our name out there to help out. We've noticed that there's a lot of newer syndicators that they just don't know about the insurance side of it all, right? They know how to underwrite deals, but then when it comes to the insurance side of it, then they get kind of lost. So we're trying to get our name out there, trying to go to as many events as possible throughout the nation, just to show everybody that we can help. We've started to do more and more across the country, and we've got plans for 2023 to go to as many as we can. There, as you know, there's so many out there. It's kind of hard to choose which ones are the best, but luckily we've got a great team, and we are trying to spread ourselves out so that we can get out and show everybody that what we can do.
Absolutely. Love to hear it. So I know a lot of our folks who are going to want to connect with you because you were able to share a lot of value today. What are some of the best ways for our folks to connect with you today?
Yeah, the easiest way is through email, jtlynch@rameyking.com. You can also connect with me on LinkedIn as well. Like I said, if you've got a property that you're looking to submit an LOI on, if you send me the rent roll, the T12 and the OM, I'll send you a free insurance estimate. And we've been doing this for a long time. So a lot of, don't send me every property that you see just driving down the highway, but if it underwrites on your end and you're seriously thinking about submitting an LOI, send it my way. I'll send you a free insurance estimate. And all I ask is you give me a shot at quoting it when you get under contract. And a lot of times, we're currently insuring the property. We have insured it before. I probably know the broker that's selling it, might know the owner. There's probably some history there that maybe I can help you out. There's been cases before where I've sent an estimate back and said, hey, I've increased the premium a little bit because of that fire that happened in April. Oh, there was a fire in April? Oh, yeah, you didn't know about that? Yeah, there was. It happened to 10 units, and it's an open claim, but it looks like they're getting the repairs done now. Oh, I had no idea. So sometimes there's a little bit more information that I can give on the property that you might not even know. So just send it my way and I'm happy to help.
That's valuable. What a story, right?
Yeah.
That's a big value add when you can let an investor know about something they weren't aware of, that they can then utilize that information in the way they see fit.
Yeah, they would have found out eventually, but the sooner the better, right? And just because there was a claim like that doesn't mean that you don't purchase it. It just means that there's some more work to be done, I guess we'll say. And so some of those properties are the best deals that you can find, right? That had a recent claim on it. So the more you know about the property, the better, for sure.
Absolutely. Well, JT, it was a pleasure speaking with you today and learning more about your business and how you can add value to our community. Thanks so much again for dropping so much knowledge on our listeners, and we look forward to having you back here again.
Absolutely, anytime.
We trust that you enjoyed today's show. Visit archcapital.ventures to learn more about how you can leverage real estate investing to improve your life through passive income, financial freedom, and generational wealth.